Well, hello, members. It's March 13th. Welcome to the show, the weekend broadcast, where we take a look at what happened and what looks to be next. The last couple of weeks, it's been better than expected in terms of what our expectations were. The market just keeps chugging along. I mean, we were down as much as anywhere from 13 to 14%. Now we're down 5% at worst on the Nasdaq, 1% on the S&P 500. So, market keeps clawing its way back higher. The highlights last week had to be the ECB. The ECB came out, had a big gain that was reversed on the Draghi news, so you had a big spike up. Let's take a look at that chart, where essentially, the market had pushed up big on the Draghi expectations already, right? Then you got the Draghi a news conference. During that news conference, he said we may not need to raise rates, lower rates anymore. And the market just did a complete reversal. Volume expanded like crazy, but you left volume here at the top. And then Friday, we get the reversal of the reversal, right? And we head right back up. We're still on this market. We are still doing the bearish retest regenerate. That's here on the daily. We also have it on the weekly, but on that weekly time frame, it actually has gotten over it. So that's suggesting now at this point, there's a decent chance this thing's going to push a little bit higher. And if Europe pushes higher, that's going to continue to drag us higher as well, since we seem to be tied at the hip with them and with oil. And speaking of oil, I mean, oil, the little swing point high over here is 37.60. Oil trades up, closes at 38.67. So you basically have gotten over the swing point high after an extended move here that just hasn't quit. And so as long as this continues, to push, I suspect it's going to continue to push the markets. Now, there will be a point, if we pull this back and put it on, say, a weekly, there will be a point where it becomes a problem. But that's a long way up. I mean, you'd probably have to break over 60 for that to start being a problem, which is another double almost from here. What is in effect here at this point in time is there's the weekly bearish retest regen that's just started. And so, you're going to have lots and lots of levels on the way back up that are going to be resistance. And so this thing, I'm sure that it's going to take a long time for oil to turn in a more meaningful way. But in the meantime, you're getting these huge moves, right, in terms of the percentage gains after massive losses over the last 2 years. Okay, so moving on, all of this up is starting to, figure into some bullish breath. I'll talk about that in here in a second. The oil we just covered, junk bonds, emerging markets, are enduring some, tremendous rallies themselves. Here's junk. Actually, this is a high yield corporate debt, 75 to 82. So basically, and this is a debt instrument, basically up, 10% almost since the February lows. The same theory here on junk bonds. Here you went from 31 to 34, 10%. Massive moves in terms of debt structure. That's moving. These are not normal moves, and of course we know that things are not normal right now. When we think of normal as kind of civilized moves, if you will, you're getting big spikes up and down in all these markets, and that's probably not going to discontinue. It's going to continue because, we're at a point where there's a lot of issues that are going to have to be solved on the bullish side and even on the bearish side, for these markets to make a larger move one direction or the other. And it's why I continue to think that more than likely what we're going to see is we're going to see these large ranges start to build out over multiple years and not just a short period of time. And it's been that way now for a year and a half, almost 2 years. If we pull back the S&P 500 and look at it, I mean that's essentially what is going on, has been going on here now, all the way back October, September even, of and if you wanted to, you could actually draw it back to these highs and draw the lines. So you could even go back to 2014 and say essentially we've carved out a big range now. So that's probably not going to change. I suspect it's going to continue. And the real concern, if you're trying to be long this market, is what happens if they start to expand it, right? What happens if they come down to the next ledge or even the next ledge after that? That, I think, is the larger risk over time. And we're talking about long term for these markets. For now, though, it's risk on, and that risk on, is going to continue until it doesn't, right? It's going to be that way until it isn't. That's usually the way this goes, and I don't think that's going to change. And actually, we can see that in the bullish breath. Since the bottom in February, these beaten up stocks have made huge moves. And if I scroll down, in the notes if you want, and it would be better if I could put this in a little graph form for you, but unfortunately I didn't have the time to do that this week. But I've taken and looking at the intermediate since the beginning of the year and looked at the short-term time frame since the bottom in February. And I looked at it on each of the 3 time frames. This is the bearish one. The sideways is down here. This is the count of stocks that have made trend transitions, right? Bullish, bearish, and sideways. So bearish transitions, this is at the beginning of the year, 415, 359. Then you see how it declined, and then you made those big ones again, but less of them, right? So you transition, you go bearish, and then you make less bearish ones at the bottom there in February, at the beginning of the February. And now there's almost none on the bearish. Of course, that's a reflection of what happened in the markets, right? Because at the very beginning of the year, right, we made that steep loss, a little bit of a bounce, and then we came down and tested again, right, and then started this huge rally. And so this move, this is this decline here. Then you took a little pause, right? And then in the February, or the pause was right in here, and then the February move down, you made a bunch of more transitions to the downside, but it was a lot less than here, so you had the positive divergence in transitions to bearish, and now there's almost none. Now, if we go look to the sideways, right, this is where everything went. And so big moves there, and now you made huge moves in terms of the sideways trend. So things are moving from bearish to sideways. And then finally, if we go look at the count on the intermediate, now you're finally, right, you didn't get hardly any transition up here. Now you're starting to get it to the bullish side. So what usually happens is when you get this, now you've made this big move up, now we can expect some sort of a roll over to come at some point here, right? And then what will be important is, do you get an increase in the number of these trend transitions as you come back and test again, or do we end up having the same sort of divergence, which is going to lead to a larger drop again? And that's going to be the test, in the coming weeks and even months in this market. If I look at it on a short-term time frame, right, you can see the same sort of thing. Of course, there's a lot more data points here. But on a bearish number, there was a huge number of them in that February low. Again, I didn't do this since January, but there was a divergence. So you had the big transition, a lot of stocks making new lows, turning bearish over a long period of time there in terms of days. And now I'm going to go down to here's all the sideways ones, but I'm going to go down to the bullish ones, to the recent ones. And what you can see here on the recent days, right, you had this huge spike in bullish trend transitions, and now they're starting to go back down again. You can see it here, right? And so you made your spike, you made your big move, and now we're starting to see it roll over a little bit. I expect we're probably going to see that happen to keep prices kind of contained here in these markets in the coming days. So when I look at this says, hey, yeah, things are getting better. But then again, at the same time, we're reaching that point where we're probably going to level out, get some sort of a little pullback, and then we'll see what they look like in terms of a positive divergence or not in the coming days and weeks. Looking at it from another perspective, and here we're looking at trend with respect to what the trend is and how extended it is on this time frame or on these charts, what you can see here is the NASDAQ sideways on a short-term time frame, sideways extended. We have the bearish extension here. I expect these are going to get worked out on the S&P and the Dow. You've already had the trends sideways elsewhere, and you're starting to see some trend changes to the sideways on this time frame. Let me pull these off and redo them. On this time frame, here's the bullish ones in the safety sectors on the intermediate term time frames. And then here's the ones that are extended, right? All services, energy itself, financials, technology, healthcare. They're all extended, they're all bearish. Those are candidates for some sort of an improvement in the coming weeks. And so that, all of this, along with what we just talked about up above, suggests to me that what we can expect is this move up to plateau, come back down, and then potentially come back up, maybe do a break of what may be swing point highs at that point. That would be 6 weeks out if that's true. Get your trend transitions, get these things to change, right? And then if we see that divergence we were just talking about, that's where we potentially roll over and start back down. If we see an increase in the number of trend transitions to bullish and we don't see the divergence on the intermediate term time frame, then potentially this thing can even go higher. That to me is the most likely case as to how this works out. If I look at what's real and what isn't real, it looks to me like we do see gold stocks truly making a transition on all the time frames. And so if I go back up here, and here's the GDX, bearish still, but extended here on this time frame. On the bullish side, we're starting to get a little extended on the bullish, but we could go farther. But we just transitioned on the weeklies, and that looks the same with gold itself. And then if I look at the EEM, IYT, the IWM, the XLB, all of these that have transitioned, these look to me still to be bearish. And so let's just pick one. Here's the oil services. You're only 33%, so you've transitioned on this time frame. Bearish is extended, so yes, we can get a farther move. We're only 11% on the bullish side, so these can carry for a while, but this has a long way to go potentially, right? And that tells me that the scenario on these is different than gold, where gold is extended about to change. These are young in their trends and not about to change. I think that's probably more bearish longer term here. The only one that really looks bullish on a long-term basis where it's transitioning is the gold and the gold stocks. What's my bottom line? Last week I was thinking that we would probably get up and see those bearish retest regens on the S&P 500 pushes down. Well, that's not what happened. If we pull up the S&P 500 here, we got the highs here were 2020 and 2022. We closed just over both of them, both on the daily and on the weekly. And so at this point, the bearish retest regens, and I didn't draw it on the daily because it's actually fallen off the chart now, but it still, of course, is here on the weekly. That bearish retest regen, we just barely got over it. When you do this, you'd like to see one more, a bar that will be true on the daily and also true here on the weekly. But they have pushed beyond where we thought they could go, and that actually is the sign of a very strong market when it does something it shouldn't do. That tells me that more than likely we're not going to see some sort of an immediate rollover here that goes deep. More likely, if we get the rollover, it comes back to a support zone, right? And then comes back to test again. And so that looks to be the more likely scenario as we go forward. And so I think that's something to put on your radar screen and to respect. Best case this week is that the NASDAQ, the NDX, these other indexes catch up with what's happening on the S&P 500. And so if I take the NDX, Here's a swing point high. Let's see if it can get over the swing point high. Let's see if it can get over the bearish retest regions. That would allow these indexes, right, to kind of catch up with the S&P. So what we might end up seeing is the S&P just kind of level out, whereas these others kind of grind a little bit higher as they catch up. So I think that's the most likely scenario this coming week. At this point, I'm sure most people are starting to think that, maybe things really are okay. We're seeing that with the risk on now in the junk bonds, in emerging markets, all these places, right? All the junk being bought, money being thrown in, thinking, okay, maybe the worst is over. We even had all the hoopla this week with the 7-year anniversary. Don't get caught up in the up, right? Because it can easily become the down again. As I just said, it looks to me like the scenario is more of a process where we're going to, play out some sort of a rollover and then a comeback and a test, and then that's where we're going to find out whether really the badness that has been built in, the likely scenario that I believe is still the likely scenario, that we're in some sort of a range, right, to the downside, building out a range. That's when we'll find out whether that's true or not. Right now, we're over here. We'll see if it rolls a little bit, maybe a little bit higher this week, and then some roll, and then eventually some sort of a retest. Looks to me like what's going to happen. So that's it for this week. Thanks. I'll be with you all week as always, and we'll see how it goes. Thank you.